Good morning everybody, welcome back to another Chart Nerd technical analysis video. Today we will be discussing Fetch AI on the larger time frames, and basically I just wanted to do a quick video anticipating the merge tomorrow where we have SingularityNet, Ocean Protocol and Fetch all combining to create ASI or Artificial Super Intelligence. Now this is a very anticipated event. A lot of people have been waiting on this event, and we're going to look at the charts now and see if we can have any sort of guidance or direction in regards to what might actually happen. So I'm going to break down a few scenarios for us and actually take a look here. So let's dive into the weekly chart for Fetch. So short, sweet and simple right now. All I've got in the charts in regards to indicators are these two EMAs here, which is the yellow is the 20 EMA and the red is the 55. You can see that when you're above these EMAs and you're coming back to them for support and continuing, this is when you're in uptrend. And when you actually lose these EMAs and hit your heads on them on the way down, this is when you're in a downtrend. So from this high up here in this all-time high in March of 2024, Fetch AI is currently down 65% roughly and has been down 70% in total to $1. What a psychological level to bounce off of, right? Now, what I wanted to point out is that potentially we have come down to a key level of support right now, and this is why we're seeing some relief this week on Fetch. So if we go from the local all-time high back down to this low of which we came from at around 50 cents, what you'll notice, especially if I take off these EMAs, what you'll notice is that right now we are bouncing off of key support on this golden ratio, the 0.618. So we are seeing relief, which was expected off of this area. You can also see prior the 0.50 at $1.32. We actually had a couple of weeks hovering around this price too, but that just eventually fell through and we did come back to this $1 range and are finding support. So right now, if we have a little zoom into the daily time frame and have a look at what's going on, I will come back to these EMAs on the weekly shortly, but if we have a look at the daily time frame, I do believe that right now we do have this sort of descending level of resistance on our heads that we need to break out of, or we need to see Fetch at least try and approach one more time. And we've also got this level of descending comes back within this channel to either its lows on this support line or to its resistance points on the top of this channel. We either bounce up or we're just caught between a rock and a hard place right now. So right now, because we've had two touch points down here on these lower trend lines, and I do believe if I get the RSI on quickly, I do believe that we might have some sort of bullish divergence here. Hidden bullish divergence where you basically put a low in the price and then put in a lower low. So we had this low here back in June, and we've come back in July and put in this lower low. But in the RSI, what you'll notice is, if I could just drag this up quickly. No, don't want to let me do it. What you'll notice is that we've had these lows and a higher low. Okay, so we've got a low and a lower low in price and a low and a higher low in the indicator in the RSI. So this indicates a hidden bullish divergence, which potentially means that we're looking to sort of reverse this downtrend we've been in and sort of come back up here and try and retest. I would like to think trying to get back to this high of which we've came from, which is roughly at $1.80. But we do have key resistance in front of us to break through. But there are good signs on the daily. The fact that we've had this hidden bullish divergence and we are seeing some relief off of that. It does look like we're also coiling up in some sort of ascending triangle here where we've got higher lows and a level of resistance that we need to break out of. So if I have a little zoom in here and clean off this chart right now, what we're trying to do for Fetch at the moment is go from this local low back up to this high where we fell from on the 26th of June. So we're going from this low trying to get back to this high. And again, as I always point out, we have resistance at the golden ratio, which is the 50 and 61% ratio of a move back up to this high is the simplest way to put it. And these are areas that normally when you come down to them act as support, or when you come into them act as resistance. So we have to see Fetch sort of come up here, maybe meet this as resistance at $1.30, come back for a higher low and then attack this level again. And from this low that we've put in at around $1 on the 20, where was we? On the 5th of July, in fact, in the 5th of July. So not too long ago, only a week or so ago. From this low, we want to see an impulsive move up, a correction down to a higher low, and then eventually build some sort of structural foundation where we can start pushing on to higher targets and try and at least get back to this $1.80. Now this $1.80 area will act as key resistance, and I'll show you why as well. So if we do see ourselves get up to this sort of area, you'll you'll notice that around $1.83 to 85 is sort of a very key area of resistance, and it's where this local move on the 26th of June ran up into this previous level of support and met it as resistance, and we've come back down. So right now this is a key area that we need to break through, $1.85, and we also have levels on the Fibonacci that I just had on for you, $1.30 to $1.47. These are all targets that we need to see broken in the next few weeks, or on some sort of relief to start pushing on back to higher targets up here for Fetch AI. Now, is there any confluence in the charts here towards a breakout or a breakdown? Well, one way that I'm going to look at it, okay, and the final outlook for me is we can get two different Fibonacci's on here on the weekly time frame, okay? We can get the one back down to this low of which we came from, and this is what I had at the start of the video, and I said $1 is an area of key support, which is why we're seeing relief right here. But at the same time, there is another fib that I wanted to get on to show you, and this ties up with those EMAs that I had on at the start that might just be giving the game away. So if we go from the all-time high of Fetch back down to its all-time low, there is another golden ratio that looks very attractive to me, and it's this 0.50 here, back on this previous high that since breaking out, Fetch hasn't actually come back down and back tested. So is this going to be a buy the hype, sell the news event? Are we going to see some relief in the next week coming up here before then having a last final leg down inside a falling channel? I had this channel on the start of the video as well. You can see we're inside this falling channel. If we just continue to have some sort of 5-wave correction down here, then it's a possibility, because again, you've got wave 1, this is a wave 2, you've got a wave 3. Right now, if we get a wave 4 up to resistance and then get the final 5th wave back down, then this could provide optimal opportunity back testing this high. Now, a lot of people aren't going to want to see that or hear it, but we have to look at all scenarios, okay? And the 20 EMA and the 55, right now we're sort of caught between a rock and a hard place. So you can see that there's 20s coming down and this 55 also. We don't want to see a death cross. We don't want to see a cross in those EMAs, because the price, what we might see the price do as these EMAs are coming down is we could coil up between these EMAs and basically get something called an EMA squeeze. And if we start creating lower highs on the weekly time frame, holding a level of support and eventually break down, then potentially again this is where we could see the 75-cent range hit for Fetch. Let's say, for example, and again, I'm not trying to be super bearish, okay, I'm not, but what if this $1 holds, this low holds for the next couple of weeks, and we do see relief back up towards the 20, because this would be the next point of contact. If we do have a pump up, I believe we will try and get to this 20-week EMA, especially if we close out above the 55 this week, which is currently at $1.16. So potentially we could come back up here to this EMA. But what if we come up to the EMA, and as I said, the EMA keeps coming down and bringing us down, we do something like this, right, where we come up to the EMA is coming down, we hit it, we come back for a low, we keep coming up, and we're holding this level of support, and we're creating some sort of descending triangle between the EMAs in a squeeze here. This is something we don't want to see. But if we do, just for example, okay, just getting this descending triangle target, you can see that if it does break down and does start creating at this $1 level of support, this is where we could get the breakdown to 75 cents. And what this would entail as well is that 1, 2, 3, 4, 5 wave correction. Okay, and this wave 4 is formed within this descending triangle before breaking down to 75 cents and back testing this previous high that we've come up to, came back to support on the weekly 20 EMA, exploded out and haven't actually back tested. And this would be the sell the news event for me. Okay, where the merge actually happens, we rally up for a week or two, and then coming into August, September, we have the final sort of drop down to support, and then in Q4 we start picking up again and heading on to new highs. I think that is a large potential. Alternatively, because I have been speaking about it coming down quite a lot here, if you want to hear the bullish case scenario, the bullish case scenario goes back to the first Fibonacci that I showed you, where retracing to this low here in January off of this pump, we've come back down to the 0.618 at $1. I keep talking about this $1. It's key support right now. We have to hold that, okay? $1. So if this is the low right now, and we have put in some sort of correction, potentially we've had some sort of A, B, C correction, back down to a key level of support on this fib. If this is the low, okay, and we have put that in right now, correction over, and we're going to start picking up. What we need to see is another key level of resistance above us taken out. So getting a fib on from the low back to the high now of where we've come from, you can see that we've got a very strong resistance level right here. Multiple times that was previously held as support, we held it as support, and then we just capitulated. Okay, so I would expect now this previous support, because it's been lost, if we start rallying our way up, again, you've got $1.80 as resistance. And this is where I think you've got the 1, 2, 3, 4, 5 waves back down, okay? But at the same time, if this is the low and we can come up here and come back and put a higher low in and start building a foundation here, okay, and forming some sort of ascending triangle under this $1.80 resistance, then we have the potential to be breaking out of the woods here. And you'd have a breakout target if this was an ascending triangle from resistance to support. And what you'll notice is when we do start tackling out, for example, of some sort of ascending triangle that could be formed here, okay, the breakout target would bring us back up to this all-time high. So all we would need to see to confirm that this is the low right now is this $1 hold. We come up, put in a higher low, form some sort of ascending triangle, okay, and again, the ascending triangle target breakout would be from the 050 to the 0 fib, drag it across, and when you do break out, you can see the target brings you to $3.50, which is the all-time high. So that for me would be the scenario if this was the low in right now. But it does look like, again, it does look like these EMAs are being dragged down here, and we are going to get caught between them for a few weeks until it makes a decision. If you want to go off ascending support here as well, what you'll notice is that we had support back here on this trend line in October. We came up to a high, sort of coiled back to the 20-week EMA and back to support here in February. We've come up for another high, and on this correction, we've actually lost this support, ran into it, and confirmed it as resistance. So this is why it's also a little bit concerning, because we've had a multi-year trend line, or actually it's over a year, nearly under a year actually, of trend line of support that's been lost. So a good few months where we've been holding this ascending level, and right now we've lost it, hit our heads on it, and are coming back down. Okay, another precursor to coming back down is the close below this weekly 55 EMA. That's not a good sign. You want to see us close above that, so look out for this on tonight's close. Okay, the weekly 55 EMA currently sits at, where are we, $1.18. If we see the close of Fetch's candle today above $1.18, slightly more bullish. If we see it close below that, slightly bearish, because we've already had a close underneath the weekly 55. So yeah, I hope you enjoyed the update, guys. Again, I don't have any sort of bias to a bullish or bearish. I just try and show you what's in front of me and the data that I'm seeing on these charts. None of this is financial advice. It's all for educational and entertainment purposes only. I hope you enjoyed the content. From Chart Nerd TA, take care. Peace out.